Welcome to the weekly market update. I'd like first to start the session by giving you some information about me. My name is Ihab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Here are the events that we will be looking at this week, the tradable news that we will follow. On Monday, 15th, today in the evening at 9:45 p.m., New Zealand retail sales quarterly release. Tuesday at 9:30 a.m. London time, UK CPI, the inflation number from UK. No high impact news on Wednesday, and on Thursday at 12:30 a.m. Australian employment change. On Friday, we have at 9:30 a.m. UK retail sales, and at 1:30 we have three tradable news. I will choose to trade the US core CPI. We have also Canada core CPI and the Canada core retail sales. Last week, the biggest winners against the US dollar were the Japanese yen and Swiss franc, as investors looked at less risky assets. The United States and the Canadian markets are closed today for holidays. So we can see now there is less in market volatility. Last week, oil had another range movement of price change as comments from the International Energy Agency or IEA put downward pressure until the Organization of the Petroleum Exporting Countries, OPEC, where the United Arab Emirates Energy Minister made a comment about a possible production cut agreement that helped the price of crude oil bounce on Thursday and Friday. On 4th February, Mario Draghi gave a speech in which he said that the ECB will not surrender to low inflation, suggesting that there will be more stimulus in the March meeting. The trouble is, however, traders don't appear to be taking his words seriously, as investors sent the euro higher again and result in closing of short and increase of long positions. Perhaps his speech this week will be taken more seriously or the minutes will reveal a more solid plan. However, at this stage, sentiment remains positive on the euro and negative on the European stocks and the US dollar. There will be a number of tradable economic releases this week. We will start with New Zealand retail sales that will be released on February 15, today in the evening at 9:45 p.m. London time. New Zealand retail sales release is a quarterly release. Therefore, we are more likely to see surprises in this type of release. And considering that the New Zealand dollar is facing certain potential of easing, a weak release could drive the market against the New Zealand dollar, the Kiwi. It's forecasted at 1.4%, the retail sales, and previous release was 1.6%. How to trade this news? New Zealand retail sales is measurement of consumer spending in the retail sector, as it reflects the strength of the economy and the strength of consumer spending. We will be looking for a difference, or we call it when we trade news deviation, of at least 0.4 to 0.6%. Let's say 0.5%. So we look for deviation of 0.5%. The deviation is the difference between the actual release, when the news release actual number will be released, and the forecasted number. So we will look for deviation of 0.5% from the forecasted number. Therefore, a positive 1.9% or better will be somewhat bullish signal for the New Zealand dollar, and a 0.9% or worse will be bearish signal for the New Zealand dollar. Our focus will be on the headline release, not on the core release. However, both releases should not conflict. They will both released at the same time. So we will make price trade or option at 1.9 or more, or full option at 0.9% or worse. We will be looking to trace this release using after news retracement method. We will wait for the release and wait for market spike, first reaction of the market, so the news, and then wait for a decent retracement before making the trade or buying the option. As usual, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, the market trend before the news release, and just follow the pre-news trend. So you have to be careful if we don't get our deviation number, because the market now moves in range. So you should see what direction the market is going, which trend, and make your trade depends on the trend just before the news release. UK CPI will be released on February 16 at 9:30 a.m. London time. UK CPI release should provide some directional momentum for the pound, as recent market turmoil have driven risk aversion flows. A stronger release could strengthen the pound further. It's forecasted at 0.3%. Previous release was 0.2%. We will be looking for a variable deviation of 0.3%. If the inflation number or the CPI number remained above 0.6%, we will make rise option trade. If the inflation number decreased to 0% or less, we will look to make full option on the pound. If our deviation number is hit, there is a strong possibility that the market will move more than 50 pips immediately. So we'll make rise option at 0.6% and full option at 0% or worse. We will also use the retracement trading method to trade this release. We will wait for the deviation number to hit, wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option or placing your trade. Also, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. Next news we will watch this week is Australian employment change that will be released on February 18 at 12:30 a.m. The Australian employment change release will be an important release for the Australian dollar, especially considering the recent divergence with the New Zealand dollar. If we get a stronger release, we could see further differential in the Australian dollar and the New Zealand dollar cross. It's forecasted at 12.9 thousand. Previous release was 1,000, but in minus. How to trade this news? The deviation that we are looking for is at least of 25,000. Expect to see the effect of this news to last minimum 45 minutes to 2 hours as expiration for the option you will buy for this news. One other important news to pay attention to is the unemployment rate, which is expected to remain at 5.8%. If we don't get a conflict with the employment change, then we will proceed with our trading plan. We will look to trade this news using after news retracement method. We will wait for the market to retrace and stay out of the market during the release time. So if we get a plus 38,000 of release, our bias will be to make rise option on the Australian dollar against other currencies, weaker currencies. If we get minus 12,000 of release or worse, our bias will be to make a full option on the Australian dollar against stronger currencies. We will only enter after we see a decent retracement from the initial spike and if we get these release numbers. But if we don't get the deviation number, as usual, I expect the market to follow the pre-release market condition and sentiment, the pre-news trend. UK retail sales will be released on February 19 at 9:30 a.m. London time. UK retail sales is expected to come in at 0.8% and we will be looking for a minimum deviation of about 0.5%. Considering the lack of central bank directions, I would probably prefer a short trade on rally, following the long-term trend of the market downwards. So it's forecasted at 0.8%. Previous release was minus 1%. The monthly retail sales report is a direct measurement of consumer activities at the retail level. Higher release is generally good for the economy and for its currency. A lower release is considered negative for the economy and for its currency. Our tradable deviation or surprise factor for UK retail sales is 0.5%. If our deviation is hit, we can expect the market to move more than 50 pips within the hour. Of course, considering that we are expecting a 0.8%, the forecasted number, I would recommend to make rise option if the figure is at least 1.3% or better, and make full options or full trade, down trade, if the figure is below 0.3%. We will be looking for an after news retracement method for this release. And also, if we don't get the deviation number, the 0.5%, I expect the market to follow the pre-release market trend. Last news we will look to trade this week is US core CPI that will be released on February 19 at 1:30 p.m. London time. US core CPI is expected to rise to around the 0.2%, and with the federal backing off from its recent hawkish stance, a stronger CPI reading could once again push rate hike possibilities up. It's forecasted at 0.2%. Previous release was 0.1%. How to trade this news? Our minimum tradable deviation for this release is 0.2%. If the release number, the core number, decreases to a minimum at 0%, then we will make full option on the dollar. And if the core release is 0.4% or more, we will make rise option on the US dollar. We are going to focus on the core figure, the core number, or core CPI. That's CPI except food and energy, not the headline CPI. And I'd recommend to use the dollar, yen, or euro dollar to trade this news. We will be looking for an after news retracement trade for this release. If we don't get the deviation number, I expect the market to follow the pre-release market trend. I want to remind you, if you missed a webinar or want to watch it again, you can watch it at binary.com YouTube channel. You can also find instant updates of the news at my resource page on my website, ihabjubail.com. At ihabjubail.com, press resource page. So then I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.